Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's proceed with our analysis of the euro currency. Today we have a bit more sophisticated task because we currently have to make an analysis on the market without clear, bright patterns. So this is every time it's more difficult trying to catch some indirect hints that we could use to understand coming performance or what really could happen. So as you can see, yesterday market has not shown any significant breakout, so it has formed another high wave pattern, but it stands as inside one to the Monday candle, and this doesn't make the overall situation clear. In such circumstances, we need to take a look at the higher time frames and in general in our longer term analysis what we in general expect to get. And as we said previously, we have forming morning star pattern on the weekly chart, which potentially is bullish, and it suggests upward continuation with some kind of the A, B, C, bottom D pattern. So currently we are watching for BC leg. What we could understand from this flat standing here, it mostly looks as a bullish sign, just because of the reaction to daily overbought and fib level. So we could see that overall reaction is not very strong, so market doesn't show too deep retracement. It mostly shows the minor pullback out from the overbought, and then it stands flat. So this usually the consolidation under the strong resistance usually suggests the possible upward breakout. So this is a kind of the preparation, the energy building before the challenge. That what could tell us this standing after the minor pullback near the resistance area. So that's what we have on a daily. At the same time, we have some contradicting moments on the cross market analysis on the dollar index and on the intraday charts. Other things also stand not as simple as we would like to. So for example, on the dollar index has different shape of this action. So you can see on the euro currency, this action has been interrupted here by the high wave, another pattern that we have traded before the Fed statement, and then market collapsed. But on the dollar index, we do not have this interruption. We have smooth upward action that looks like the thrust. So actually it has enough bars to treat it as the thrust by the chart Napoli terms. So take a look. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 candles to the upside. Close below the 3x3, and the second close market hits the major support area. So this is potential bread and butter setup. It means that market should show at least 618 action to the upside. So right to the 618 resistance of this action. Correspondingly, on the euro currency, it means that market could show some downward action here, at least based on the dollar index. But as you know, the dollar index consists just on the 70% on the euro. The other currencies also takes the 30%. So for example, this smooth action comes due drop of the Great British Pound. So that's why the dollar index has no interruptions in the middle of the thrust. And currently, although we have the potential setup with the bread and butter trade, it could be achieved not directly by the euro currency, but maybe by some drop of the Great British Pound or something of that sort. But this potential setup brings more risk to idea on the euro currency that it should continue move higher, right? So before this, maybe we could get a retracement. Now let's take a look what we have on the euro currency directly. So on the 4-hour time frame chart, this market hasn't shown any direction, no ABC retracement, it turns to the sideways action. The triangle consolidation right near the resistance just confirms the idea of the possible breakout to the upside. Also here we see some kind of the bullish dynamic pressure because market shows the bearish trend while price action stands flat and forming high lows. So that suggests the possible upward action here. On the hourly chart, we have got yesterday regardless triple to sell has been formed, but it already has hit the minimum target. It's been completed. So, and nothing else has been formed here because market stands as we see inside the triangle. So what we could do in the current circumstances. The most simple decision is to wait, of course, but this is obvious. So we could wait for in any time. But what we could do in trading, so how we could use the situation, use this triangle for a possible trade. I would suggest, guys, the same tool that I mentioned previously when we talked about the high wave patterns here. And we said, well, if market doesn't bring us the clear patterns, but we have some range that will make an impact on the further direction. So as we know, in heavy patterns, in the direction of the breakout, market should follow. And currently we have approximately the same story. Here we have called for using the stop entry orders because, for example, let's take a look at this 4-hour time frame chart with the triangle. In general, we tend to idea that maybe that is a consolidation before upward breakout. Why to not place the stop buy order somewhere on the breakout of this triangle? Maybe even above these highs, maybe very close to the highs, somewhere around 1245 area. Because if downward breakout will follow, as it suggested by the dollar index setup, so what if the parent body will start to form and dollar will become a bit more expensive? In this case, indeed, the downward action could happen. You will not be hurt by this action because you will have the stop entry order, not the limit order. But if the upward breakout will happen, and here we do not have any patterns that could let us to take the position, we will step in right at the breakout, and in this case probably the upward action will continue. So that's the most acceptable tool, I suppose, in the current situation, because actually we do not have something really clear that tell you that we should buy or we should sell and where we could place stop and so on. Maybe if market will form indeed deeper retracement, in this case we will finally get AB equals CD pattern. In this case we will have got this triple to buy here. But this will be quite another story. We're talking right now about the triangle. So that's our position currently on the euro. Because currently, guys, on the euro currency I do not see some alternative way to trade, but only using maybe stop entry order based on the possible upward breakout. It's most acceptable compromise in current situation, I suppose.